All right there, survivors. Here we are back again. I have no idea what number of videos this are because these are becoming long. But we're talking about setting up a corporational categories in Quicken and or QuickBooks. If you haven't gone and seen all the other videos before this, shut it off, go back and start at the beginning because it goes through explaining what we're talking about here on categories for your bookkeeping, your accounting, for your company. Again, I'm talking about for corporations, LLCs, sub S, sub Cs, where it may be, partnerships. This all applies to you. And I'm going through all these different categories of how I do it. Again, I am not a certified CPA or a tax accountant, but I will say again, I probably know more than 95% of all of them, of how things work with tax deductions and taxes. But I want to, right now, we're just going over categories. So let's dive back into it. Hey, before I get started, hit that like and subscribe button, please. And we'll go forward from there. Hit that share too. Send it to your friends and family. If you have anybody who's ever asked you anything about how do I do books or set up a corporation this is just one part to setting up a corporation of how to get your books in order using the Quicken Deluxe program and or QuickBooks. So carrying on. So we covered in all this other stuff. We talked about all these different categories. Now we're at the financial category. Again, this is my header for setting up my category, and this is my sub. Under financial category, and this is what I do. This is what works for me. May or may not work for you. Under this, I put accounting. So if I have a bookkeeper that does anything, this where my expenses, again, this is all expenses. We're not going into income yet. We'll do some later videos on how to categorize income, where all these have just been about expenses. So accounting, any kind of bookkeeping that I have done with falls under my financial head category. That could be your, if you hire somebody to do your books, or if you have an office manager that does write checks for you, anything along those lines. If it's a third-party company that does that, whereas, it's a 1099 for that, of what you send them, they're not an employee, they're third party, then that would go under here that does anything paperwork-wise for you, filing, whatever it may be. Estate planning. We have estate planning. That's few and far between, but that could fall under this category also. CPA. So your CPA, if you pay your CPA, whatever you pay him, then believe it or not, that is all tax deductible. Oh, I need to write this up here. This is all deductible. Okay. Your CPA, whatever you paid him, a couple $100, a couple $1,000 to do your taxes and everything, that is actually a tax deductible item. All right. IRS, anything that I have dealing with IRS, penalties, late fees, along those type of lines, it just falls under this. And this is all for, being able to find it where you need it, keeping it all organized. I'm a big OCD organized type of individual along those lines. IRS, if you are anywhere, if you're on SNAP or EBT, food stamps, any kind of government assistance type of programs, then any kind of expenses that deals with that, then I would put it under the financial system here and or make it its own separate category. I don't have any experience with that, so I don't know. Gifts and donations. This is the big one. Gifts and donations are 100% tax deductible, okay? But charity, obviously you write a check, you do a credit card, anything along those lines, you have a record of it. Now, the other thing is that there's gifts, and a lot of people do, and donations, gifts and donations. A lot of people don't do that, or they don't keep track of it. I do, because I give quite a bit on gifts and donations. So on gifts, I actually go in, like I said before, there's a memo page, and I say, this is what I gave. It is valued at this. And I make a ledger entry into that, showing I gave a $500 freezer to some people. And so I go in on my books and I put in $500 tax deductible as a gift, falls under charity. Donations. I guess a perfect example of this is whenever you go to Goodwill or something like that, and you go and you drop off your stuff, they give you that little piece of paper and they sign it, and it's up to you to put a fair and reasonable value of what your donation was. Household items, $50. You keep track of all those, do a ledger entry. That can add up after a while. We definitely, just personal in our family, we try to do at least 15 to 20% in gifts and charity over our overall gross income that we bring in. Or a lot of people will do their net income. We're not going to get into the weeds or schematics of that. That's just what we feel comfortable doing, and the good Lord has blessed us for it. All right, gifts and donations, all tax deductible. Now your home, and I did put tax deductible down there because we talked about some of this before on your home, that there's a certain percentage that can come out as that is tax deductible. But insurances, this is where your remaining insurance will go. You would split it up, and it has Quicken has a great way of splitting categories, splitting money, so you can track it. So if you're, say, 25% of your homeowner's insurance because it goes towards your home office, the other 7, which is tax deductible, the other 75% will go into this category, which you know is not tax deductible. Mortgage, I don't have a mortgage or P&I. Basically, I'm debt free. So I would put my mortgage here, payments to my bank, mortgage, but also make a subcategory for your P&I, principal and interest, and separate those out. One thing is so you can see how much interest you are paying and how that interest number is going like this, and that principal number is just creeping along, because it seems like all you do is just paying the interest and not hardly anything on P&I or a principal. And that kind of goes back into the whole Dave Ramsey theory of double up and pay on principal, how to get out of debt. We could do a series on that down the road. We're not getting into that right now, but that's where I would put it under your header home category, and then your mortgage, and then underneath that would be your P&I. Anything else on your insurance? On the electric, I already broke out electric separate. Under home, though, also you could put, if you have a natural gas bill, you could put that on there, and you could separate that out. A certain percentage of that could be tax wrote off. I can't think of anything else for utility wise that, I don't know, put it in the comments if you think of anything else. All right. And then, loans, this is I don't have this because I don't have any loans, but loans, I would also separate. If you have an auto loan, again, auto loan, separate out your P&I, your principal and interest. If you have a boat loan, if you have an RV loan, if you have a motorcycle loan, if you have all those, you're trying really way too hard to impress the Joneses or keep up with them. So just letting you know, that's my opinion. So auto, boat, RV, cycle, each of those break out your principal and interest on those. And again, part of your interest will be tax deductible, but your principal is not. It's why it's called a loan. You got to pay it back. But that's where I would put it. So we're going to end this video here, and we're going to go on to our final and last one. Side Hustle Survivalist here. God bless. Please hit that like and subscribe button, and hopefully this will help some people get set up.